free for iPhone and Android devices.
Sebastian Galley, Senior Foreign Exchange Strategist at SG Americas in New York. Good morning and welcome, Sebastian.
Good morning.
Maybe we're seeing the reemergence of the dollar here, or is this more of a yen story?
Well, it's a combination of the two. It's also a broad story that people are searching for yield globally, and they need to find a funding currency. And the dollar was a funding currency globally for many years. I, for example, was short the dollar for a few years when I was basically on the asset management side in fairly sizable amounts, and you felt very, very confident about being short the dollar and being long other assets which had higher yields. That type of thought process is changing now. People are trying to figure out which one they should short. At one point, let's say a year or 2 years ago, it was short euro, and now I think the consensus is definitely driven to being short yen. So that's becoming the global funding currencies because they expect the Bank of Japan to stay on hold or even expand monetary policy for a long time. But if we switch to the dollar story, I think the mechanics are changing globally and on that potential path. One of the reasons is that the back end of the yield curve, so if you look at the 10-year yield, the 5-year yield is starting to be very attractive relative to a lot of other fixed income markets around the world. So the normalization of the U.S. economy is starting to make it very interesting for fixed income investors, whether they be Japanese or others, to start moving some money back into the dollar after years of selling the dollar. So there's a definite, systemic shift which has happened.
Let's move this forward a little bit. I thought this was an interesting part.
Well, as you say, still a ways to go. Let me ask you about this survey we conducted here at Bloomberg of economists who are saying the Federal Reserve is probably going to reduce its bond purchases in $10 billion increments over the next 7 meetings, and it'll end up ending the program a year from now. Would that be your track?
No. I think we're probably the most bullish on the street in the U.S. We do believe that it is normalizing, and we expect that rapid rate of normalization, so tapering, to happen a lot faster than they actually are telling us. This is what happens in the period of normalization. The central bank will convince you that they are staying as expensive as possible because it is their interest to maintain yields as low as possible for as long as possible. What they actually believe is something different. So they give you forecasts to push lower expectations. So, for example, they've reduced by 25 basis points their expectation of rate hikes in 2016. That's part of the game. And they are credible as long as growth stays not relatively moderate and inflation remains relatively moderate. On the inflation side, they'll be right for a long time. On the growth side, eventually we'll have to change, and dance a different tune. When they do dance that tune, then we will see these expectations of QE tapering to accelerate, and this happened much earlier than is currently planned. And the same way, that's the reason why the bond market is very hesitant, at least particularly in the back end, to rally. It basically sees that eventually there will be this significant shift in policy, and that will mean that yields will have to normalize ever more, and that's why the 5-year yield in the U.S. has a tendency to want to increase significantly, because there is a lot of pain to be had if that process of normalization happens a lot faster than anybody expects.
Well, hello and welcome in from Sunnyvale, California. I'm Mark Vierra, and this is my technical analysis weekly video that I do. Going to go through some trend lines, some moving averages, chart patterns, and volume, and a half a cup of some trade methodology. So let's get started. That guy was a pretty fast talker. All right. So here's my HotStockMarket page and all my image icons that I'm getting ready for my weekly log. And I'd like to start with a monthly. We could take a quick look here first at some percentages. I got a spreadsheet where I keep track of this stuff. And at the end of this video, I'll show you at the end of my trading log where I have links to this spreadsheet if you want to check it out. Also, right now, since I'm here, for YouTube viewers, if you're on this About tab and you show more, you'll see I have all these links to reference what I'm talking about. Getting back, of course, everybody knows, we're up big for the week. But here's our total for the month. And what's astounding to me is we're almost at 30% for the year. And now I keep track of the year from the close of, January 2012, December 31st. That's the close of the year. And there was actually, if you look, there's like 1.6% between the close of the year that I think counts. So with my respect to all the 27%, we're really almost 30% actually in reality. So let's see, in our quarter we're 8% for Q4. Wow. Now this is wrong. We made a new high. I'm usually keeping track of the percentage from the high, so I'll have to correct that. In any case, let's get on to the monthly chart. System's running a little slow right now for some reason. Okay, just some just basic trend lines. You know, we got a lower support here, which for the monthly to get down to there, that would be pretty bearish, and you'll get to see in this video. Last video I was slightly bearish, and we did see some downside. We'll get into that, but charts are all pretty bullish now. Zoom in on the monthly candle, and this is a deliberation, which is a 3-candle formation. We're seeing resistance at the green dash. You know, we'll be melting up, I think, pretty much this week. Slight bullish bias, probably more consolidation, and you have to take into account holiday. We're going to see pretty light volume. That's the monthly candle right now as it is. Close that, and let's take a look at some weekly trend lines. Let's see. So this is zoomed out here. Keep your eye on this blue dash. Turned into a pretty important pivot, and also this yellow one. These three right here. Let's zoom in. Let me see. They turn into some pretty key levels for us, and the candle formation. This is a tweezer. Pretty reliable at feeling out a bottom level. So I think we're going to get pretty good support pivot, blue dash. Break below that, which I really doubt, will be much stronger support at this yellow dash. I get 1825 to 1827 here, a new weekly. Above that would be a new trading range. You know, I wrote 1825, 1827, somewhere around in there. Looking pretty bullish. This candle also is larger body, so it's a type of engulfing the previous candle. So we got pretty bullish charts here. Let's see, I'm measuring this leg, slight consolidative move here, and our weekly extension would put the 50%, which I mark usually. That's going to be where you're going to find strong. That's 1850. We're getting there, folks. We are getting there. Let's see what else we got for weekly chart formation. We can see a rounding top. Above this 1809 level is our confirming a direction in that pattern. And a target here. Let's keep our eyes on these targets, because this is equidistance would match that 50% fib level, the more conservative 1834 target. And what else do we have here? Daily trend lines. This is just basic. Here's your resistance, and you know, I don't know if you call that much support. That would be a pretty much of a big breakdown, which I'm not expecting. We'll get more into confirmation from volume later on, but zooming in on the daily, this is what I would say would be our trading range, and you know, we have upsloping trend lines, so the trend is bullish. It remains bullish. We're in a you know, pretty bullish. Obvious trend lines are marking, and anyway, I'm just showing this would be a range here. I don't think we're going to consolidate into that too much. We're holding support pretty good. Now get into topping and bottoming tails here in a little bit, but that's also telling us something as well. There we go. This blue line right here from the top of this peak to the top of this peak provided an excellent pivot marker, and I'm drawing this one through the midpoints of where it gapped down. It's not really a gap, but we'll say it's a gap. And through this, you know, these long-bodied candles, I want to call them gaps, because this is where the market is sped up, and now the market's slowing down. And so I get these pivot markers where the market is moving fast, and you'll see they provide excellent markers for pivots. And I would call this yellow dash right here would be a strong consolidated support. Alright, zoom in on that. Got a different marker here from the, you know, we had put in lower highs, and a trend line drawn from that would show us right where we pivoted. So these trend lines can mark pretty good spots to find support and resistance and pivot levels, and just kind of moving with this bottom up sloping to get a trend line, I would say we would find, you know, some consolidation. We'd probably find some support in there as well. Now let's see, regression. This is a 3-year regression channel. We can see you've got a lower range and a higher range, and we're in the higher range. Alright, and I drew some Andrew pitchforks. This was the original from the low to the high, and then you mark the correctional phase, and then you get this pitchfork, and we respected the bottom range of that pitchfork. It's kind of amazing, and I just redrawing more of a near term from low to high to a pullback, get an idea of what other possible ranges. You can see here's one scenario, and even closer, more near term, you know, from this low to this high. Yeah, just kind of playing around with Andrew's pitchfork. This will give us you know, some levels that will most likely be respected. What's the next chart here? Yeah, the daily Fib extension. Here's a good chart here. Now these are your hit me in the head with a hammer moving averages. You know, these are lagging indicators. What's interesting though is that they point out the obvious. Okay, the 5-day cross below down here, and we had some bearish. 5-day crosses above the slower, longer term moving averages, and we have a bullish leg. Below, bearish, above, bullish. Here, we cross below briefly for a little bit of a pullback, and we see this is quickly bought up. So, unbelievably, I'm going to call that a selling climax at that high level. Is just amazing. Hit below the bottom of the Bollinger Band, and now we're crossing above. So that kind of tells us we might expect another considerable bullish leg. And if we look at the longer term moving averages, here it is, lower Bollinger Band right there at the 50-day moving average, and that was bought up. So charts are looking bullish. Here's ICHI candle, and we can see that our blue line is crossing above our fast and slow line, so it's looking like it's entering a bullish mode. Of course, we'll see if the fast line crosses above the slow line, see what happens there. Next chart, we have our daily pattern work charts, and several types of patterns from this consolidation that I'm noting here. The most prominent would be your round bottom, prominent and popular, and this would be your confirmation break of that. The other, what we have is a right angle broadening and descending. Okay, you can see, and not only that, but it's also, if we drew a trend line up to where we are currently, we'd have this other type of, it's commonly referred to as a megaphone, but it's a broadening. Top is the more technical term for it. Here we had a bearish hammer eye, which I looked up its odds, and it strikingly, it actually acts as a continuation more often than it does act as a bearish candle. Now, here's where I get into, we have a topping candle on the daily, and this is just a daily chart, so we have to expect that that's telling us of some near-term consolidation. I don't think it's a big bearish indicator. If it was on the weekly chart, I would consider that pretty bearish. But look at the distance between this bottoming tail compared to the topping tail. So this is pretty much telling me that it's more bullish than bearish, because our sell climax here is being bought up, and so you can get an idea from these tails here on what to expect. So that's those are our patterns. Let's get into, I've got some measurements. So here's your broadening top in the red, and I put measurements here on the right angle, descending, broadening, to give me a distance. And it works out to be about the same as the round top on the weekly and the round bottom on the daily, which is 1830 as a median, and then your equidistance in that 1850-52 level. So our chart patterns are agreeing with each other. Here's the measurements for the round bottom. Again, we get close, a median at 1830 and an equidistant measurement near that 1850, 1848 in this case. So I thought that's interesting. There's our pattern targets. You'll get all these charts. If you want to look at all these charts, I've got them in my weekly log, and you'll see in the YouTube links to be able to get to that. Now, here is one of the more bullish confirmation charts that I have to present is volume. We've got some hidden bullish divergence in the background from this lower lows on the RCI with higher lows on our price. We have one of the most important things I think to note here is where the relationship of the distance between the point of control and the upper value, your value and profile boundaries are close together with the point of control up there, telling us that we are in full tilt bull mode. And looking at the size of the volume from the previous sell climax here, we hit that. That's why I'm calling this, even up at a higher price with this bottoming tail and the volume, I'm saying that that level is just bought up aggressively. Then we drop down in volume, and we're going to see lower volume up as a base level, a consolidated base level is being stomped down. So high volume, this is a push through supply, and it's unusual. I mean, that's a Wyckoff. Usually that's something you're going to find in the bottom of a market, but before a markup phase, you're going to see a jump through the creek or push through supply, like we're seeing right here. What else do I have? Point of control, no upper value indication, upward trend continuation. Point of control should provide a strong support right there, I think. High volume indication of supply is overcoming demand at the upper value. So it's going to be a tough nut to crack up there. I think it's going to be more of a sideways light trading this week with a slight bullish bias. Probably be a next couple weeks, but I am expecting higher prices. And the same thing on the hourly chart. We have this point of control way up to the upper value area. Point of control close to upper value, same as the daily. After and here's a closer view of the selling climax. So you just had huge amounts of volume, and that's a clear indication here that this I keep wanting to say this lower price, but this is a high price here, really. So these levels, these prices are seeing demand, and on the hourly you can see this bottoming tail. This is an indication of what I'm talking about. Now let's get into some market profiles. Here's a daily market profile. This is, I'm looking at 3-month daily. That gives me a near-term point of control value areas to show you. The low profile area is way down here. I want to point out here this, we've already went through the volume, but marking this trend line here from these lows to this low, and just pointing out that this trend line pivot coincides almost exactly with the volume, point of control, and this monkey bar, which time, price, opportunity in yellow. So we have a confluence of indications all agreeing with each other that this was a strong pivot. I think we're going to find good support now at this level. So that's what I'm looking at. Pivots, resistance turns into support. All right. Our near-term playgrounds, not much additional to add to this. We have, price support at point of control. But what's interesting now is we can see the speed of the market, price acceleration at low volume. See, there's no volume in between here, and we gapped, and now these playgrounds are showing us that the market is decelerating. So the speed of the market speeds up and then it slows down. And as traders, that's important for us because it's at we want a slow time in order to enter trades, okay? You got momentum traders too. I mean, there's all kinds of different methodologies. But for me, I like to see a market slowing down in slow motion. And this is what I'm seeing. These overlapping of the playground is telling me that the market's slowing down. I should expect some consolidation, and that's it. All right. Just another look at volume. This is a different type of, this is an unexpanded monkey bar market profile, and I'm just showing here's where price sped up, and we have a different playground up here, but now our playgrounds are overlapping. So that's a pretty clear indication of the consolidation, what I'm talking about. Yeah, the VIX, it went up, now it's going down. Okay. Not much to see here. This is what I'm finding interesting too. Took me by surprise, especially, the Fed tapering, and you thought, wow, the market should pull back, but I guess it was just that small 10 billion amount was the porridge isn't too hot, it's not too cold. The market, I think it's more a factor of the market likes clarity, and this is what I think we're seeing. But I think it's great to see that the treasuries, the US dollar, and stocks all moving up on good news. I think that's the way it's supposed to work. So it's just kind of interesting. So TLT, this is a 20-year Treasury ETF, breaking out of descending triangle. So we're seeing strength in U.S. Treasuries. I wouldn't expect to see too much more strength, but here, now, besides volume, this chart right here is probably, I think, the most singular aspect of what we can expect, because this is the price of the 30-year yield. All right, we see upthrust here. So at 3.95, getting close to the 4%, we're seeing sentiment change from getting into risk off assets and into stocks. So so a higher yield is bad for stocks. You'll see liquidity wants to move out of risk on into risk off because they can get a better yield. It's just pretty basic. Now we're seeing stocks up along with treasuries, so that's kind of setting up for a good bullish move. I think Treasuries continue up, we'll see the yield drop down to this trend line here. And I think that's going to be very bullish for the stock market because, and it's got a little more room to go before we get up close to that 3.95%, where I think might be an area of interest for a reversal. You might see liquidity moving away from stocks at that point. So I think that gives stocks a little room to budge there. And I think that's an important chart. Our U.S. dollar, here it is, boom. U.S. dollar likes to see these tapering, 10 billion or not. But we're seeing some weakness up in here. This yellow triangle's volume spread analysis indication. Just seeing a little bit of weakness in the dollar. We might most probably, this trend line, symmetrical triangle, will most likely turn into a support. It's a pivot right now. But I think it's nice to see the U.S. dollar move up with stocks. I think that's bullish for the stock market. And the euro, I did end up shorting the euro. I got 3 out of 6 lots. 6 lots was my max risk. And we're breaking down. This is turning into a pretty good trade for me. Very large up thrust candle. This is a no-brainer bearish indication on that U.S. dollar strength. I am currently I am still short the euro. I did loose 1 lot. Let's see, we've got a chart on that I can show you. What else on this chart? Let's see, well, this is a 3-month near term. I think we'll find support here at $1.35. I think we'll probably see some euro strength into this week, but I am overall bearish on the euro. So here's the 2 of my remaining lots up here. I had a 3rd one that was kind of about right here, and that's the one I sold down at $1. Let's see, I think I sold it at $1.36.55. And what that does is, in case the euro moves up, I can re-enter that lot. And I've also reduced my risk. I've taken profit, I've reduced risk, and so this is a good trade. And it's a trade that's moving my direction, and it's just sort of some methodology. Scaling in and scaling out is what I want to emphasize there. You want to scale in, scale out. That's the way I roll. So I think that's pretty much it. Want to wish all of you some happy holidays, Merry Christmas, ho ho ho. Here's where you can find HotStockMarket.com. And let's see, at the end of my trading log down here, you'll see there are some pretty good links. Good prerequisites to the stuff that I'm going through here would be, this is a free Thinkorswim paper trading account. That'll get you onto the Thinkorswim trading platform. Great platform. Here's a reference. This is a great site to check out chart patterns and candlesticks, and got FinViz in here, and it's just there's information here. This is off of my trading log. Want to mention also, to find information here is subreddit StockMarket, and that's it. And I hope I will see you on the boards.